following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. Welcome to the offices of Duke and Duke, 100 South Broadway, Philadelphia, Pennsylvania. Someone sent me an email asking to describe some of the weirdest things that I've seen happen. This could take 4 days, but I checked with Twentyman last night, and because Jimmy and I worked together for 50 years, and I said, Jimmy, we had to pick out some of the crazy things that we've seen. He said, what would you pick? And he reminded me of one of the traders when Jimmy worked at he worked at Clayton Brokerage. It was owned by Roy Longstreet, and they were bought out by Conti Commodity, and Conti Commodity moved across the street. They were on the south side of Wilshire Boulevard, and the east side, and they moved to the west side at the McCulloch Oil Building up on the 20th floor. They had a beautiful modern office. This was 1968, I believe. And there were three market wizards in that office, probably more than that, but three that I can remember. But there was a gentleman there that would, we had a big Bunko Ramo board. We didn't have these, big fancy computers and stuff. We had to call our orders in. We had the squawk box that came in all the time, and it was on all day long, and they were telling us what was going on in the different markets and stuff. But this fellow would go in front of the Bunko Ramo board and set in a Buddhist position, and then he would go into a chant. He wouldn't do this very often, but only when he was ready to do a trade, and he would go hum, and then he would go into a chant and do a couple other little things, and he would get up and go back in to see his broker, who was Jack Fletcher, and he would put the order in, and then he would go back and set in the Buddhist position again and stay there for about 15 minutes, and then he would get up and leave, and that was it. And Jack would tell us, he called later on and got out of the position or whatever. And I don't know if he made any money or not, but that was one of the craziest things that I can see that Jimmy remembered. But there were some other ones that were pretty weird too. But we don't know. There was another guy there in the office he was the math guy. He taught math at UCLA, which was right across the street, PhD in mathematics, and he had always got there early, so he had a table all to himself, and he had nothing but calculators and numbers and everything, and he never put a trade on. He just literally would not put a trade on. He never traded. All he did was do the numbers, and nobody ever knew what he did, but that's what he was doing. So we'll see if that's what's going on. We've got an interesting thing happening in the Treasury bonds this morning, folks, but I wanted to start out the day with the gold market. I posted the chart of the gold that I wanted you to see this morning because when you do this, you get tired of listening to the stuff. I thought I'd give you an idea of, the kind of work that Jim Twentyman has done through the years. But if you'll notice on this gold market, it's a 60-minute chart going back over the past month. You'll see these red boxes that are here. The real first important one is the one on the left on June 1st, where we pull back to a 61% retracement. And all you have to do now is to have some fun and do the work yourself. See how this actually works. You'll really get an idea of how important the markets respond. But if you were to take this little red box and move it over to the high on June 25th and then double it, it would give you the exact low on the 29th of May, the exact low. And if you'd done this red box and multiplied it times 3, it would have given you the high at 1242. And then if you'd have given it again at 1237 and doubled it again, it would got you to your next high, which was the 61% retracement on the gold, which came in at the 1266 yesterday, and now we backed off a little bit from that level. So we want to watch that very closely. You'll see here, you'll see the same thing now with the on the long-term daily here. with the gold market. You'll see the long-term 61% retracement that came in yesterday. And so if this is correct, the gold market is probably going to be, under a little bit of pressure here. But if we get above the 1275 level, that tells us we're probably going to go a whole lot better. But that is a head and shoulders pattern that you're seeing there in the gold on the daily. So keep in mind that that's also a possibility. And then if we take a look at what happened in the silver market at the same time, you're going to see here that we did exactly the same thing, where we made the exact 61% retracement in the silver market as we were doing it with the gold. Silver hit it exactly yesterday at the 1720 level, and that was when gold was hitting its too. So that's they're all coming together, so that I think it's important that should happen. Now, we do not have a head and shoulders pattern, in the silver at all. That's just a retracement pattern back, after the big ABCD pattern that we had at 1810. So this is going to be an interesting spot. Once we get silver above 1740, then I think you've got a chance for this market to really start to move. And what we'd like to see is what this pullback, if we do get it, and we've started, in that direction, at least today, we would get an idea that that's what's going on as far as the retracement level. So it's still holding up really well with the silver, and I think that's doing pretty well given this. And I don't know where it's going to go from that level, but it's going to be interesting, as it transcends these next lows. I wanted to bring your attention to a market that is under some pressure here, also in the realm of metals, and that is the Mr. P. Where did it be? You read my mind, which is an easy time. Anyway, he asked for copper, and here it is. As you can see, we had this copper rally that lasted 10 days. It made an ABCD pattern at a 382 retracement up there at 1212, and now we've broken down below the May lows, as you can see that. I believe we're trading at 1202 or 1201 right now, and the price objective on this, if the ABCD is correct, is going to take us into new low ground. Now, there should be some strong support at $2 a pound, and that's the 786 of the whole move going back to January. But the fact that you had that ABCD pattern that didn't go anywhere, roughly, and breaking down like this, that has a really ominous tone to it. So watch that, very carefully. Now, if you wanted to have some fun and learn some of this stuff, it's just, pick up a copper chart and do that same thing that we did with gold. Find a swing that you see that repeats over and over in the copper and the gold, and then go back and see how often the market is going to go 2 times that or 3 times that, and that'll tell you pretty much, what that harmonic number or the DNA of that particular commodity happens to be. The way it helps you is with gold, there's actually 2 numbers. There's 17 and 34, but 17 would be the absolute maximum risk that you would ever want to take on gold. And when you stop and think it's trading at $1,260 an ounce, that's just a little over 1%. So that's a very fair assumption of risk. So 877-927-6648.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry, powered by the acclaimed With TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, we're back, folks, and I posted the chart in of the 30-year Treasury bond. Tom O'Brien gave a really good dissertation on the bonds. We're yielding about 2.2 or 3, I believe, on the, maybe it's a tad less than that right now, 2.1. And when you stop and think, Germany is at 0.4, and some of the other countries are actually negative, France, Japan, and a few others. Our yield here looks pretty good. And if they decide to buy bonds, which makes it a no-brainer, they take in money and give out very little or negative, and then they just turn around and roll that into Treasury bonds at 2.1%. Basically, what they're doing is they have to convert their money from their currency to the U.S. dollar, and that makes the U.S. dollar strong. And we're starting to see some of that here again also. But that's related to currencies, and these are related to the interest rates. Now, as you can see here, at around this 168 level, we're going to be reaching a 78% retracement. We'll have multiple A, B, C, D patterns coming in at that point. So this will be an interesting time to see if these Treasury bonds will hold this, because if they get much above the 170 level, these things could possibly go down to 1% or even less, given what the Fed is doing. But we have to wait and see what is going to happen there. Now, if we take a look at that German bond, this is a very heavily traded thing across Europe. This is equivalent to our 30-year bond. You can see that we have a really nice butterfly pattern forming up here at the highs. We have double highs yesterday and today, as you can see. We also have a 3 drive to a top pattern there and multiple ABCDs coming. So this is a real critical level. Should we go popping through here, we could be looking at even negative rates in Germany, going from 0.5 to even negative. And with the Draghi on the tube today talking about how dangerous it was that the economic union was going to fall apart, Again, they're using that same tactic that we saw in October of 2008 about all the banks were going to fail and we were not going to have any more money and there was going to be bread lines, and you know what happened after that. So be careful what they tell you, because what they say is not always what they mean. So keep in mind that these interest rates are going back down, and that means these bonds and notes and Treasury German bonds are going higher. So the numbers that we're looking at are pretty easy to see. That's 168 and change. In the Treasury bonds themselves, we're trading just about 168 right now. There's a little bit of resistance at the 168 level, and we're very, very close to that right now. And all that is a 1.27 expansion of the last 3 or 4 days trading range is what that usually means. But the strength of it tells us that, you know, it's probably better to wait and see what happens with the next leg of this thing going to the upside, because that would really be interesting. So we'll see. This is all actually forming into a really nice scenario from what Norm Winsky talked about from AstroTrend yesterday, that we have this big day coming up, you know, on Monday and Tuesday, and then of course we have another one on the 28th and 30th, which is what we think is going to be one of the biggest days of the year. That'll be 3 days after the British Brexit, and whether that's going to mean anything, you know, we'll have to wait and see as we walk through this. Someone's asked a question about the copper. What's the downside on this? Well, I mentioned that I don't know where copper is trading. It should be at around 201 a pound, I guess. But if we go below $2 a pound, if we see 199 in copper, that sets up a price of about 190, down another 9 points, because that's a 382 retracement after an ABCD pattern, and also with a very large ABCD measuring to $1.90 a pound, which is where we would be below where we were when the market was bottoming 5 months ago. So that would be another sign that, you know, things are not quite as robust as they might think. They used to call this Dr. Copper, because if you followed copper, you could pretty much follow what the stock market was going to do. But we lost that when quantitative easing came in. That threw everything out the window, because what the Federal Reserve has done is they've tried to manipulate the 4.5-year business cycle by using monetary strategy instead of fiscal strategy. And fiscal strategy is what we need. We need more tax cuts and more taxes for some, less for others, and then be able to use some of the money from that to build projects like fixing bridges and better schools and stuff like that, as opposed to giving it to the banks or to the stock market and letting them have all the fun. But things go, for every day of sunshine, there's a day of rain, and when the rain comes, the sun shines just a day behind it. So all we have to do is be patient, because once President Clinton is elected, all things will be good. We'll be getting all of our checks in the mail on the 15th of the month. We won't have to work anymore, and all we have to do is apply for the food stamps, and we can keep the Democrats in forever, and we'll all live in Camelot. And we all know how Camelot ended, don't we? Okay, let's take a look at one other market that someone's asked me about. If you give me a second here, and that happens to be the crude oil market. So let's just take a look here at crude, and we'll look at it right here. We'll look at the chart we were looking at yesterday, because we were looking at this. Hold on one second here. We'll get this little puppy up and take a look at it. This is crude over the last, since the beginning of the year. You see we made the double bottom down there. We made a slightly lower low there on February the 14th by 1 cent. That was a beautiful butterfly, because we took out the low from middle of January. And of course, when that usually does that, there's no selling. That brought in the first big move that took us up into March. Then we made a 50% retracement of the low from February. That ABCD measures to $51. Yesterday we hit 51.60. We're trading a little bit below that right now. So there's a potential here that we could have a pretty good correction here in oil from this level. And we'll see if that is going to be the case. And of course, yesterday on the Bloomberg and CNBC, they were all talking about the new highs for the year and the 6-month highs in the crude oil. And not many people mentioned that, yes, that is true, but there was also a Fibonacci number there staring him in the face at that level, but not many people follow that. So it really didn't mean very much to folks that were looking at it. So anyway, that's what we're seeing in the crude oil. Gasoline futures are, lagging badly, which is usually this time of the year the demand is really strong. And that doesn't seem to be happening, but it's still early in the year. And but we'll see if that's going to have any effect on anything at all. And I think one of the most amazing things yesterday was the fact that the stock market itself, we're going to cover it here for just a second, but we'll talk about it a little bit later, is the fact that the stock market really didn't go very high. They were talking about the Dow Jones, which is, those 30 stocks, and the fact that it hit 18,005 and it made a higher high than the previous day by 2 points. But if we take a look at the NASDAQ, which had been the leader during this whole thing, this head and shoulders pattern is certainly still there. And we've been at the 78% retracement level from the April highs for 9 trading days now, folks. That's very unusual. So we'll see what happens.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Okay, we're back, folks, and we've had a question from someone in the den about a price target of gold for around $12.89, $12.90. That's certainly easily to do, because all we have to do, that's just a little above the 786. The question is if we're going to get a pullback. Yesterday's high in the gold was a 61% retracement of the whole move. That number was 1266. The high was, I believe, 1269. And that was, quickly on a fast tick. So it quickly sold off. And silver, hit the exact 61% retracement from the high we made last month at the 1720. So we certainly can do that. The question is how we're going to handle this pullback if we're having this pullback in gold, because we came very quickly off the bottom, which was a 382, and so we want to watch what the next thing is going to do. If it's really bullish, what you'd like to see is a 382 retracement in gold that would take 3 or 4 days to complete, like early next week, maybe like Wednesday of next week. You'd be looking at a market that maybe backed off $17 or something like that from the high. That would take us down to around the 1250 level. And if you remember, 1250 was a level that it exploded to when it made the new high up at 1306. It would be going back to that area, one more time. And that area would also be a nice retracement of 382 off of the low from 1199. So, but that has to unfold. Still early. We can't really, do much with that at all. We've also had a question about this NASDAQ chart that I posted, where we've been pretty much at the 78% retracement with some of the narrowest ranges that you've seen all year. And folks, that is it's troubling to the bulls and it's troubling to the bears, because you don't know what's happening there. The volume is just absolutely dried up over there. And it's dried up in the stock market too. I mean, it's just very little going on. There doesn't seem to be, much participation. So what is it going to take, to shake this market loose and get it to move either one way or another? We'll have to wait and see. Folks, we're only, we're 14 days away from the Brexit. I guess it's 2 weeks from today. I think that's the 23rd. Let's double check just to see what it says. No, 23rd is 2 weeks from today. And so this is going to be a very interesting day because of the British thing. They're always on the tube, telling them how the end of the world is going to come to the United Kingdom if they pull out of the European Economic Union. If you believe that, folks, I still have 2 shares of the Brooklyn Bridge available that I've been saving for you. Just send me a check for $10 at $5 a share, and you'll have your 2 shares of the Brooklyn Bridge. If you look at what the bookmakers are due, and believe me, they bet on everything in London. They bet on whether a fly is going to land on the left side of the cake or the right side of the cake, but the bookmakers keep accurate records, supposedly, at least that's what we're told, and it's supposed to be now about 2.5 to 1 of a exit out of it. I was just in the UK during my trip across Europe, and it's one of my favorite cities to go to because it's such a beautiful and vibrant city. It's just it's really spectacular. Hong Kong to me is probably number 1, and I think New York is number 2. Chicago's number 3. And I would think London would be right up there with San Francisco as one of the great cities of the world, and enjoy it very much. But they don't use euros there. They use British pounds. So you don't even know they're in the economic union if you're not familiar with foreign exchange, or you don't read the news or anything like that. You wouldn't know that there was anything there at all. So I think they're going to be just fine. And in fact, I know they're going to be just fine. So we'll see, how it happens. I just don't understand the whole theory of the economic union. You have 22 countries and you're trying to get them to agree on something. Hello? That doesn't happen. You got 22 megalomaniacs all trying to find, not all of them are megalomaniacs, but, they're all trying to make their own mark in the world. And we'll see. Remember all we went through with the Greek thing, how bad that was going to be, and what happened? Absolutely nothing. So I don't think this is going to that might make a big difference for a few days in the markets, but I don't think it's going to be, see what's going to be going on, pretty much the same way. Okay, that's my 2 cents worth on that. Let's take a look here. Since we're talking about foreign exchange here, I would like to show you the euro, because it's one of the better things things for trading purposes that you can have. I'd just like to show you this. I like to use 4-hour charts, folks, because it allows you to see, 6, 7 weeks, 2 or 3 months at a time. I mean, you can see all the way back 4 months with a 4-hour chart. And all I've done here is I've just measured the major ones. I mean, there's a lot of, you can see a lot of 382s and stuff, but you'll notice that the major expansion on the upside was 1.618, and then the market came down to a 61% retracement of the low from March and a 1.27 expansion of the low from April. There were two numbers there. That was the number we were looking at. And then, of course, we had the 3-drive pattern, as you can see right there at the 111. And then we had the 135 pattern following that, which was the higher bottoms. And then with the big up day was the day when we had the Federal Reserve but it wasn't Federal Reserve. It was the jobs report, the wonderful jobs report, the worst one in 8 years. And the market exploded. And you'll notice that what it did yesterday went to exactly a 61% retracement of the high in May, and now we've broken well over 100 points, and that's pretty much what we're looking at. Let me put this chart in here. I've just been told by one of my colleagues that I didn't post a chart, and I can see that I didn't post a chart. Hold on one second. Okay. Anyway, now you can see the chart. I'll go over it again. You'll see that the ones. See what I did was I marked the little red boxes. Those are the main ones that I look at: 1.618, 618, 127, also 786. But you don't see any 786 in here yet. But they'll pop up occasionally. But those are the ones that you want to be watching it. So I have it posted. I hope everybody can see it, and I am told that they're not. So I'm going to try to post it again. And okay, now we're all right. All right, there we go. Okay, there's what we have going on with the euro, and what we're going to do now is we are going to see if we have a good. Everybody can see it. Everybody's fine. I want to check and see what the markets are doing here. We should be having a little bit of support here. We're rolling over now, folks, on the the S&P. We go from the June to the September now. There's a 10 points difference. So if you're still in the September, all you have to do is to you're figuring 10 points, and they're still doing a lot of trading in the June, but today's a good day to start rolling over. If you want to do it without gaps, but what you should do is just add your September data. So September will catch up the next month or last month or so, and you'll see all the swings that are there. But if you still wanted to trade the June, you can do that up until probably Monday or Tuesday or even Wednesday of next week, without any trouble, because it's such a it's pretty large and handle about everything. 877-927-6648.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, Swim Lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber
as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the three hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Okay, folks, I want to take a second here to go over the gold market and why it has the potential to be something really spectacular. Hold on, please. You'll notice this goes back to 1980. Actually goes to 76. We started trading gold in 72. That's when it came on to Merck. We made our low in 76 at around $1.10 per ounce, I believe. Then we rallied all the way up to $860 an ounce. That 865, I believe that was. I know it was January 20th of 1980, and then we went into a 20-year bear market where we bottomed in 2001, where we bottomed at $257 per ounce. Then we started the big bull market, and that ABCD measured to just about 1900. The high was 1932. That was in April of 2011. And then we backed off, and as you can see, we came here and we touched that green line, which is a Twentyman line. Jim Twentyman looked at this many times, and when you have highs that connect and then a low that connects right to it, it acts like a fulcrum. But it also happens to be a really nice support point. It's actually a 50% retracement of this whole bull move from $1.10 an ounce all the way up to 32 an ounce. That's exactly 50% back, and it's also 70%, 7.70, which is a reciprocal of square root of 2, very close to the 618 actually. But if you'll look at that, that's very, very important that we hit that level. And then we had this really strong rally up to the 1306 level, and now we're turning. But see, the important thing is if we get above the 1306 level, that tells us that we are going to go a lot higher. And if you measure this move from the low in 2003 to the high 2011, and then it had that was an 8-year bull market, and then you had a 4-year bear market. If you would measure that ABCD pattern, that takes gold to $3,200 an ounce. And believe me, if it can go from $1.10 to $1,900, it can go from $1,000 to $3,200 without any trouble at all. Especially when you stop and think what's happening with our money supply, and what the Fed has been doing, and the zero interest rates, and this is not natural, folks, zero interest rates. It's a tax on the people that use savings to help themselves become self-sufficient in things, but unfortunately it didn't quite work out the way they wanted. But this is why this gold chart is so very important from a long-term perspective, because it has so many things going. On the other side of this, should we break below $1,000? This a really big move of at least $400 lower to the downside, which would be the 1% retracement of the whole bear market, bull market from 1976 to where we are now. But I really think that we've got a chance to hold this level. It's the biggest correction that we've had on a percentage basis in the market for the last 30 years. And it's done it very orderly. Been nothing crazy like in the NASDAQ when we made the high. We gave back 85% of it. Most of the .com stocks are, they went into tapioca. They're in chapter 12, 13, 15, whatever those numbers are. But those are the things that happened. But this didn't do that. This held right where it was supposed to. That was a perfect 50% retracement there at 10.30 an ounce. And this is why it's got a chance here. And this pullback that we had, stopped exactly, within a few bucks of the 382 level that we got down to 11.99. The 382 came in at 12.04, and we went $5 very quickly, and we're holding up relatively well. And all we need to do is to get the gold, to take off, and you could really go, because if we get it above the 1280 level, and someone already in the den asked about it, above that 1280 level, you're going to be attempting to take out 1300, and that sets up an ABCD pattern, which in itself would take us well into the 1400s. And once it starts, the people in the gold market, they don't forget this stuff. So just watch it very, very closely. That's the main thing to keep in mind. So those are the things that we're watching today. So let's hopefully that they'll see what's going on. Now, we've been in this real tight trading range for a long time now in the market. Like we mentioned, we showed you in the NASDAQ what had happened. The same thing is happening with the Dow Jones. We're doing we are doing the same thing with the Dow Jones, and also with the New York Stock Exchange Index, is that we are just basically rallying up into resistance level. We've not taken out any new highs. And folks, what's ominous about this, there is no interest. I mean, there's no interest in buying, and there's no interest in selling. That in itself, that volatility like that, if you go back and look what happened in 2007, right before October of that year, we were looking at the same thing of what's going on. So just keep that in mind very, very closely, because it's going to be really interesting, what happens from this level. So we'll see what's going on. Someone asked me a question, how to put up these long-term charts. Joe, basically what I do is I use Ensign software. It's $50 a month. You have to have a data service to go along with it. I use eSignal, then I have Commodity Code Graphics is my main one that I look at. So, but that's where you get that is Ensign software. www.ensignsoftware.com will give you an idea of what it's doing, and it has all these programs have a lot of similar things. This one actually does the ratio for you automatically, and it makes it real easy. But you got to know what the ratios mean before it really means a whole lot. So that's pretty much what we're watching. The key things I think were last night was we hit that Euro 61% retracement that we posted earlier at that 1.415 level, and that's a really interesting. Yes. They did consult with me. They came to visit me and supposed to stay a day. They spent a whole week with me 30 years ago and went over the things that I like to do and, see what's, that's really going on. So we'll see what happens. But all these patterns they're just patterns, folks. That's all they are. Some people can do things without patterns. They have their own way of looking at it. But what the main thing you have to do is you have to have a belief structure that what you're doing is correct. If you have that, then you're correct. I mean, because if you remember, the most important cycle that we have in all of is that 9-inch cycle, and that's a cycle from your left ear to your right ear. And then if you could do that, then you've got something to to hang your hat on. By far, you've asked me a question about the resistance. I'm still looking at June S&P. We should have some pretty stiff resistance at the 21.15, 21.16 today. And the reason why I say that is we made higher highs 3 days in a row and have gone absolutely nowhere. So that's why I would think that we would have some resistance up there around that 21.15 level. 877 927 6648.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we've got one of our contributors, Bill Koval from WDK Analytics, is on the line. Bill, are you there?
Yes, Larry. Hi.
Go ahead. What can we do for? What do you got for us?
Yeah, I just wanted to give you a heads up that yesterday morning I may have top-ticked the market with an odd lot purchase of inverse VIX ETF, and I'll send you the trade here later today, and just in a one slide, so that if it's of any interest to your listeners, you can show it tomorrow. But other work that I've done seem to indicate that we may well have be seeing the top is in right now. So we'll see. But It was just a little odd lot trade, and I think when you're not spending a lot of money, it gives you more. What do we want to say? More cojones to jump in. When it's right at the top, it's always a hard time to pull the trigger.
Yeah, well, we've been at this level for 9 days in the Nasdaq and has really not done very much. So we'll see if it's going to do anything from that level. But we enjoyed having you on, and you certainly give us a lot of good information. I wanted to mention one thing to folks as we're going to come up here at the end of the show. But when I make a comment about somebody, whether it's Donald Trump or anybody else, I certainly don't mean anything derogatory about it. I know our fearless leader, Mr. O'Brien, doesn't particularly like Mr. Trump, but if I do that, I know less about politics than I do anything else. So just keep that in mind as we go through these shows that we look at. I should keep it to the markets, which I try to do, but as Bill knows, it's hard to bring something new every day. So
sure.
What if we take out that high though that we made yesterday? That would mean we're probably going to go a little bit higher, you would think?
Well, I don't know. I just redid a lot of my long line stuff last night.
We're ending up the show here, my friend. So we'll have you on soon, okay, Bill?
All right. See you, Larry. Bye-bye.
Okay, thank you very much. Thanks, folks. Bye-bye.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.